Tax-exempt status for non-profit organizations offers substantial benefits that can transform how these organizations operate and fulfill their missions. Organizations with 5011c3 status enjoy numerous advantages that extend far beyond simple tax savings. The Internal Revenue Service grants 5011c3 status to nonprofit organizations that serve specific qualifying missions. These include charitable, religious, and educational purposes, as well as organizations focused on animal welfare, preventing child abuse, and conducting public safety testing. One of the primary benefits of achieving 5011c3 status is comprehensive tax exemption. Organizations gain freedom from federal income taxes, local taxes, property taxes, sales taxes, and even certain payroll taxes. These exemptions allow nonprofits to direct more resources toward their core mission rather than toward tax obligations. Perhaps the most powerful advantage is that donations made to 501c3 organizations are tax-deductible for donors. This creates a strong incentive for individuals and businesses to contribute, often resulting in larger and more frequent donations. The tax-deductible status makes fundraising significantly more effective. Beyond tax benefits, 501c3 status enhances fundraising opportunities in multiple ways. These organizations become eligible for public and private grants, many of which are exclusively available to tax-exempt entities. They can participate in corporate matching gift programs where companies double their employees' contributions. Additionally, donors become more willing to establish planned giving arrangements and endowments when tax benefits are involved. The credibility that comes with 501c3 status cannot be overstated. This designation signals that an organization has met strict IRS requirements, instantly boosting public trust. Donors, grantmakers, and community members tend to view IRS-recognized nonprofits as more legitimate and transparent, opening doors to partnerships and attracting skilled volunteers. Nonprofits with 501c3 status enjoy numerous operational perks as well. They can access lower postage rates when mailing more than 250 similar pieces. They may receive free public service announcements on television and radio. The directors and officers benefit from limited liability protection for organizational operations, with exceptions for unpaid taxes and gross negligence. These organizations continue to exist even after their founders pass away, ensuring mission continuity. Staff members can receive fringe benefits not typically available to business owners, such as health insurance, group life insurance, and corporate retirement plans. Many businesses and stores offer special discounts to nonprofits and their employees, from advertising rates to retail purchases. For religious organizations like churches, 501c3 status provides additional benefits. It enables group exemptions for branches and extensions, simplifies the process of bringing foreign pastors to the United States, and allows participation in programs like the Bill Emerson Good Samaritan Act, which protects food donors from liability when contributing to nonprofit organizations. However, tax-exempt status does come with responsibilities and potential drawbacks. The application process is lengthy and complex, requiring multiple payments. Organizations must comply with various regulatory demands, including annual reporting to state and federal agencies. Profits cannot be distributed equally, with managers limited to reasonable salaries. Boards of directors cannot be paid, and if the organization dissolves, its assets must be distributed to other nonprofits. Maintaining 501c3 status requires ongoing compliance with federal and state regulations. Organizations must file annual IRS Form 990 or 990EZ to maintain transparency. They must adhere to strict rules on political activity, as these organizations are prohibited from endorsing or opposing political candidates. Proper documentation of charitable contributions is essential, especially for donations exceeding $250. When deciding between forming a corporation or a nonprofit with 501c3 status, organizations should consider several factors. Does flexibility matter more than cost benefits? Will the organization attract funding more easily through investment returns or tax-exempt donations? Can it attract competent leadership despite compensation limitations? Despite administrative burdens, can the organization remain focused on its mission? Tax-exempt status offers transformative benefits for nonprofit organizations, from financial advantages to enhanced credibility and operational perks. However, these benefits come with significant responsibilities that require strategic planning and often legal guidance. Organizations should carefully weigh these factors when determining if 5U-1C3 status aligns with their long-term mission and operational capacity.